This podcast is brought to you by Reynolds & Reynolds, the industry leader in automotive technology. Learn how Spark AI, Reynolds' unified AI data layer, can help you unlock your full potential by visiting rey.com/spark-AI. That's rey.com/spark-AI.
Welcome to Daily Drive for Wednesday, April 23rd, 2025. I'm Mike Martinez in Detroit, in for Jamie Butters.
And I'm Kellen Walker in Las Vegas. Today on the show, Tesla earnings plummet. A U.S. auto coalition tells the White House that parts tariffs will cause layoffs and bankruptcy. And Subaru Canada aims to cut U.S. vehicle imports by more than half. Plus, Wayve just announced its first tie-up with a major automaker. Vice President of Commercial and Operations, Kaity Fischer, talks about the partnership with Nissan and what's next for the AI startup.
We've now taken that same vehicle intelligence and deployed it in the US as well as Germany. More markets soon to come. Let's run through all the news you need to know to keep up in the auto industry.
Tesla says first quarter net income fell to $409 million, a 71% decline compared with the same period last year. Analysts say global sales declined in the quarter because of aging products and CEO Elon Musk's political activism. Total revenue in the quarter fell 9.2% to $19.3 billion. The company says automotive revenue fell 20% to $12.9 billion. Without $595 million in revenue selling emissions credits to automakers, Tesla would have reported a net loss in the January through March period. Musk said on the company's earnings call that he would devote more time to Tesla and less time to his role as an advisor to President Donald Trump starting in May. Nonetheless, Musk said he expects to continue as an advisor to Trump for the rest of the president's term. Musk is head of the Department of Government Efficiency, known as DOGE.
Meanwhile, the U.S. auto industry is ramping up pressure on Trump to back down from steep new parts tariffs. A coalition of auto companies says the import taxes will destabilize supply chains and lead to production stoppages, layoffs, and supplier bankruptcies. The coalition of trade organizations represents automakers, parts companies, and dealers. In a joint letter to Trump administration officials, it writes, quote, "Most auto suppliers are not capitalized for an abrupt tariff-induced disruption. It only takes the failure of one supplier to lead to a shutdown of an automaker's production line. When this happens, as it did during the pandemic, all suppliers are impacted and workers will lose their jobs." The letter is a rare joint statement from groups representing businesses across the auto industry's vast supply chain, from parts makers to dealers. It comes as the industry braces for another round of tariffs by May 3rd. When 25% duties on a wide range of auto parts are scheduled to begin.
The new and expected tariffs are causing Subaru Canada to shake up its mix of imports from assembly plants in the United States and Japan. The company imported about a quarter of the vehicles it sold in Canada in 2024 from the United States. But as Subaru Canada moves into the 2026 model year, it expects that tally to decline to 10% of sales. CEO Tomohiro Kubota says the move will help insulate the company from U.S. duties and Canadian counter tariffs. Vehicles destined for Canada that are produced at Subaru's sole North American assembly plant in Lafayette, Indiana, have been caught in the crossfire. According to the Automotive News Research and Data Center, 26% of the vehicles Subaru sold in Canada in 2024 were built at the plant. That includes 11,000 Outbacks, 3,700 Crosstreks, 2,700 Ascents, and 138 legacy sedans.
For the first time in almost 3 years, the average U.S. franchised dealership saw a meaningful uptick in profitability in the first quarter. That's according to the Presidio NCM Average Dealership Performance Benchmark report. The report showed a 3.7% year-over-year jump in net pre-tax profit. That's almost twice pre-pandemic profits of 2019. Profits grew by 0.2% in the fourth quarter of 2024. The data is based on financial results from about 4,200 U.S. franchise dealerships of all brands and sizes that work with training and consulting company NCM Associates. The group represents about a quarter of the 18,000 plus franchise dealerships in the U.S.
And General Motors manufacturing chief, J.P. Clausen, is leaving the automaker. GM hired the former Tesla executive to lead its manufacturing operations a year ago. He succeeded Gerald Johnson, who retired last April. A GM spokesperson said Clausen elected to leave the company and will depart in mid-May. And those are today's headlines.
So, Mike, what are your thoughts on this strong letter from an auto coalition to the White House saying that tariffs will lead to layoffs and bankruptcies?
Well, it's an interesting and probably honest peek into how all these companies are thinking. They haven't really been able to say it publicly much because they're trying to sort of gain the Trump administration's favor. So you saw Ford CEO Jim Farley say the tariffs would blow a hole in the industry, and that was really the most descriptive idea of what might happen that we've seen put out there. But, it may not be all that hyperbolic. Everything we've been hearing from analysts and from people within the companies say that these taxes will lead to layoffs, will lead to lower profits. And now they have really a third party to sort of speak for them on their behalf. And, we may see these companies saying these types of things themselves in the near future. We have a round of earnings coming up at the end of the month and at the start of May. Companies like GM and Ford are set to report soon. So we may hear more about this soon.
Gotcha. Coming up, Wayve's Kaity Fischer talks about the AI startup's new partnership with Nissan. That's next on Daily Drive.
As your business gets more complex, it feels like productivity can't go any higher. You need a way to move forward to a future where you don't have to start every interaction from scratch. You don't have to search for actionable information. You don't have to manually pull data to make decisions. You need a future where the complex is made simple and you can do more with less. How do you get there? It all starts with a spark. Unlock your full potential with the next generation of automotive dealership technology that actually does some of the heavy lifting for you by texting leads, transcribing calls, making data-backed recommendations, and boosting your overall productivity so that you can spend your time and energy on what truly matters, selling cars and growing your business. Spark AI, Reynolds' unified AI data layer, can empower your dealership to operate more efficiently and effectively than ever before, so you can do more, sell more, and make more. To learn how Spark AI can help your dealership reach its full potential, visit rayrey.com/spark-AI today. That's REYREY.com/spark-AI to learn more.
Welcome back to Daily Drive. I'm Mike Martinez with Kellen Walker. UK self-driving tech company Wayve has been making news lately. Yesterday on the show, we reported the AI startup is opening a test center in Yokohama, making Japan its fourth market after the UK, US, and Germany. It also recently announced a new partnership with Nissan, which represents the company's first tie-up with a global automaker. Wayve raised a record $1 billion last year in funding from investors led by SoftBank, and including NVIDIA, Microsoft, and Uber Technologies. Vice President of Commercial and Operations, Kaity Fischer, spoke with our own Pete Bigelow on this week's episode of Shift, a podcast about mobility. Here's a piece of their conversation.
There's been a whole lot of curiosity, I think, about Wayve since probably right about a year ago that Wayve raised $1 billion in a fundraising round. And now you have your first public customer. So tell us about this Nissan deal. How did it come together?
Absolutely. It has been an exciting year for Wayve, and the focus for us coming out of Series C was really to target OEM customers and engagement. We license our AI software directly into OEMs, and we're thrilled to be able to share that Nissan will be the first to target deployment of our technology onto their vehicles starting in model year 27, which will be here before we know it.
I was just going to say that seems like a very quick turnaround. Obviously, you've been working in the background with them for a while. So, how long have you been working with Nissan? And when you get to 27, tell us about the type of system that will be offered.
Yeah, we've been working with Nissan for many months now. We are deeply engaged with the global OEM community. And again, We're thrilled that our first announcement with an OEM is one that is such a reputable top global brand like Nissan. When we get to 2027, we're looking to deploy our technology in an L2 plus capability. So imagine that as a full door-to-door solution. Imagine you pull out of your driveway and you're monitoring the system, but our AI driver is safely navigating from point A to point B. So by the time you get to work an hour later, you'll have been monitoring the system, but our AI driver will safely traverse you from one doorstop to the other.
Wow. So that's really interesting to think about. L2 plus, but door to door. So not just a highway function or not certain geofences, if I hear this right. Is it door to door in a way?
Correct. One of the differentiators of Wayve's technology is that we don't rely on high definition maps, which means that we're not limited to a geofenced solution. When we deploy our technology, that means we can deploy in new areas that are quote unquote sight unseen. We've taken our AI driver, while it's born and bred here in the UK, you could say. We're headquartered in London. We've now taken that same vehicle intelligence and deployed it in the US as well as Germany, more markets soon to come. And so, part of the, I'd say part of the beauty of that is that it's really opportune and a great complement to OEM production vehicles. OEMs, of course, don't sell in one market or even one country. They need a global solution to sell to their end consumers. And that's exactly what our technology offers.
And by going mapless, like just to double down on that, you don't need to map the globe or extensive sections of roadway and highway and Autobahn, et cetera. That's the part of the secret sauce is going without the map, and thus you can quickly spool up globally.
That's correct. So without relying on high definition maps, we're able to expand more rapidly and again, traverse more area, which makes it a much more usable product for end consumers. We know that, as end consumers, we don't want to be able to use a feature in our vehicle on one limited stretch of road or only in our hometown, for example. We want to be able to use that feature anywhere that we need to get, whether that be, to the airport, to another state, to work, running errands. And our technology offers that ability for end consumers.
Kaity, what is the secret sauce behind not needing a map, right? Like that has been a main focus for so long in autonomy, that suddenly you come along and say you're going without a map. And it certainly runs counterintuitive to a lot of legacy thinking, I guess might be the best way to say that. I did hear John Absmeyer, who was on the podcast just this past week, also talked about going down to a standard definition map. So it clearly is a trend throughout the industry.
I haven't listened to John's episode yet, but I will have to take a gander once we're done chatting here today. So not needing a map is just one of the key differentiations that's really part of our underlying technology approach. So Wayve is developing a vehicle intelligence using end-to-end AI, and we call this AV 2.0. And this is really a fundamental step change in the way people are creating advanced driver assistance systems and full driverless technology. AV 2.0 means that we don't require HD maps. We are hardware agnostic, so we can decouple the software and the hardware dependency that you see in traditional approaches, meaning we can deploy our vehicle intelligence across any vehicle platform, across a variety of embedded computes, which is ideal for OEMs who want to make sure that they can essentially amortize their investment across all of their vehicle lines. And it also means that our technology learns from ingestion of data. So just like we see with other AI applications, we ingest data. And so for an advanced driver assist system, that means on-road data. So the cameras, the radars, LiDARs, if they're available, that already exist in production vehicles today. We ingest all of those sensor streams, and our vehicle intelligence is able to rapidly learn and scale so that it can take a truly generalized intelligence and go new places and understand how to safely navigate on the road, just like you or I would. For example, you or I, we drive in Detroit, or maybe that's where we learn to drive. That means when we go to Nashville, we might not have been there before, but we still know how vehicles work. We still know the rules of the road. We still know how to navigate. Our vehicle intelligence has that same capability of adapting to new locations seamlessly because of that generalized intelligence.
And just to double down on that, it was just maybe within the last 2 months, Wayve talked about ramping up in California and getting your model to work, comparably to the one that you've been using in London for years in a matter of like 500 hours, if I remember the stat right, or if I don't have that quite right, maybe that's directionally accurate.
Yes, you are spot on. I love to see that you've been reading the blog. So just to elaborate a little bit, I mentioned that Wayve is headquartered in London. Previously, that was the one location where we were deploying vehicles, was in the UK. Last year, we actually developed a vehicle fleet and deployed it in the US. So we're based in San Francisco. And what we recently shared was that we were able to generalize or show parity of vehicle intelligence performance. So a vehicle that drove in London would drive at the same level of maturity in the US with 500 hours worth of data. And that's incredibly important because it shows how efficient our system is in learning. So instead of needing millions and millions of hours of on-road data, it's really taking a scalpel-like approach of the right data as opposed to a sledgehammer approach of having to accumulate, many, many vehicle miles traveled on the road. And so that vehicle intelligence is also generalizing in Germany. Watch this space for the efficiencies to adapt to our third country. And we're also assessing future markets that we'll be excited to share with you soon, where we expect for every future market that we add, the data efficiency will continue to increase exponentially.
Kaity Fischer is Wayve's Vice President of Commercial and Operations. You can hear her full conversation on the latest episode of Shift, a podcast about mobility. That's available now wherever you get your podcasts. That's Daily Drive for today. I'm Mike Martinez, in for Jamie Butters.
And I'm Kellen Walker. Thanks to Automotive News executive producer Jake Neer, as well as our own Lauren Seiliff, John Irwin, Gail Howe, and Lindsay Van Hully for their reporting for today's podcast. We also had reporting from David Kennedy of our sibling publication, Automotive News Canada. You can get the latest news on tech and innovation, earnings results, and everything happening in the auto industry at autonews.com.
Come back tomorrow for more about Tesla's tumbling sales and earnings with our own Lauren Seiliff. We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoyed the podcast, remember to like, leave a review, and subscribe so you never miss an episode.